Hi everyone, I'm here today to talk about investing as a beginner and how to get started. It's never too early to start planning for your financial future, so let's dive into some tips to help you get started with investing. Tip 1. Educate yourself. This means learning the basics of investing, such as the different types of investments, how the stock market works, and how to read financial statements. There are many resources available online, such as books, articles, and videos that can help you learn. Tip 2. Set goals. This could be saving for a down payment on a house, building an emergency fund, or planning for retirement. Once you have your goals in mind, you can start to determine the best investment options to help you reach those goals. Tip 3. Start small. It's important to start small and gradually increase your investments as you become more confident and comfortable with the process. You can start by investing in a low-cost index fund or opening a brokerage account and making small, regular contributions. Tip 4. Diversify your portfolio. This means spreading your investments across different asset classes, such as stocks, bonds, and real estate. By diversifying your portfolio, you can reduce your overall risk and increase your chances of success. Tip 5. Be patient. Investing is a long-term game, and it's important to be patient. Don't let short-term market fluctuations discourage you. Stick to your plan and stay invested for the long term to give your investments time to grow. Tip 6. Avoid get-rich-quick schemes. One of the biggest mistakes beginners make is falling for get-rich-quick schemes. These schemes promise huge returns in a short amount of time, but in reality, they often result in big losses. Stick to long-term, proven investment strategies and avoid anything that seems too good to be true. Tip 7. Consider professional advice. A financial advisor can help you create a personalized investment plan based on your goals and risk tolerance. However, be sure to research any advisor you're considering and look for someone who is a fiduciary, which means they are required to act in your best interest. Tip 8. Monitor your investments. While it's important to be patient, it's also important to regularly monitor your investments to make sure they're performing as expected and to ensure they align with your goals. Consider setting up regular check-ins, such as quarterly or annually, to review your portfolio and make any necessary adjustments. Tip 9. Rebalance your portfolio. Over time, the allocation of your investments may shift due to market fluctuations and changes in your financial situation. To maintain a diversified portfolio, it's important to regularly rebalance and adjust your investments to keep them in line with your goals and risk tolerance. Tip 10. Stay disciplined. Investing can be an emotional process, but it's important to stay disciplined and stick to your plan. Avoid making impulsive decisions based on fear or greed, and stay focused on your long-term goals. Investing as a beginner can seem intimidating, but by following these tips, you can get started on the path to building a solid financial future. Remember to educate yourself, set goals, start small, diversify, be patient. Avoid get-rich-quick schemes, consider professional advice, monitor your investments, rebalance your portfolio, stay disciplined, and don't forget to invest in yourself. Tip 11. Invest in index funds. Index funds are a type of mutual fund that tracks a stock market index, such as the CF 500. By investing in an index fund, you can gain exposure to a broad range of stocks and achieve diversification in your portfolio with just one investment. Index funds have lower fees than actively managed funds and have a proven track record of delivering solid returns over the long term. Tip 12. Understand tax implications. Investing can have tax implications, so it's important to understand how your investments will be taxed. For example, long-term capital gains, which are profits from selling an investment held for more than a year, are typically taxed at a lower rate than short-term gains. It's also important to consider the tax implications of different types of accounts, such as a traditional or a Roth IRA, as they each have their own unique tax benefits. Tip 13. Invest in real estate. Real estate is another investment option to consider, especially if you're looking for diversification outside of the stock market. You can invest in real estate through real estate investment trusts, REITs, which are companies that own and manage income-producing real estate. Alternatively, you could consider buying rental property, which can provide a steady stream of passive income. Tip 14. Consider alternative investments. In addition to traditional investments such as stocks and bonds, consider alternative investments such as commodities, precious metals, and cryptocurrency. While alternative investments can offer diversification, They can also be more volatile and come with higher risk. Be sure to research and understand the potential risks and rewards before investing in any alternative investments. Tip 15. Remember to stay diversified. One of the key principles of successful investing is diversification. So be sure to spread your investments across different asset classes such as stocks, bonds, and real estate. By diversifying your investments, you can reduce your overall risk and increase your chances of success. Tip 16. Understand the importance of emergency funds. Before investing, it's important to have an emergency fund in place. An emergency fund is a savings account specifically for unexpected expenses, such as a medical emergency or job loss. Aim to have at least 3 to 6 months' worth of living expenses saved up in an easily accessible account before investing in other financial products. Tip 17. Set investment goals. Investing is most effective when it's aligned with specific goals, such as saving for retirement, buying a home, or paying for a child's education. Defining your investment goals helps you stay focused and motivated, and it gives you a roadmap for making investment decisions. Tip 18. Keep an eye on expenses. Investment expenses such as fees and commissions can eat into your returns over time. Be mindful of the expenses associated with each investment you make and consider low-cost options, such as index funds, to keep your costs to a minimum. Tip 19. Be patient. Investing is a long-term process, and it's important to be patient. Don't let short-term market fluctuations discourage you and resist the urge to make impulsive decisions. Instead, focus on your long-term goals and remember that successful investing is a marathon, not a sprint. Tip 20. Continue to educate yourself. Finally, be sure to continue your education about investing. There are countless resources available, from books and articles to online courses and workshops, to help you deepen your knowledge and stay up to date on the latest investment strategies and trends. In conclusion, investing as a beginner can be overwhelming, but by following these tips, you can increase your chances of success. Remember to have an emergency fund in place, set investment goals, keep an eye on expenses, be patient, and continue to educate yourself. With discipline, patience, and a solid plan, you can build a strong financial future. Good luck! Like, comment, and subscribe.